going to get undone. The Gift Nifty is already indicating a pushback of about 350 points this morning. The implied open lower by 367 and seems like we're going to take out that 24,100 level where we shut shop in Friday's session for the Nifty futures. Right now, the Gift Nifty at 23,732. Let's bring on board Kunal and find out what he's proposing to do in this market. Kunal, seems like that good work of last week is going to get undone. What trade do you recommend on the index?
Yeah, good morning, Aisha. So I think some bit of it could be undone. We've had a fantastic rally for the index. We were going through a patch of, bound to go into a patch of consolidation. We saw a tinge of that, I think, shaping up on Thursday, where you saw the, Nifty trying to come back towards 20,700, 650 kind of a mark on the spot levels. Friday was apparently a very good day for the index where we clawed back about 24,000 mark. But then broadly, when you try and assess the last three trading sessions, we're just about trying to establish maybe a 500 to 750 point kind of a range for the Nifty. I would sense that the trajectory is still on the upside for the index because we've still not broken below any major or a critical short-term support. So the bias for me on the index still remains bullish. But yeah, like what we flagged off even last week, that there could be a possible retracement towards 23,500 mark, and that should be taken as an opportunity to go for a buy. So if we open at current levels of 23,750, no trade on the index as such, but we'll wait for maybe another 200 points on the downside for the risk to be a little bit more better potentially over the next couple of days.
Kunal, in the last 3-4 days, we saw roughly around 7,000 crores of shorts getting covered on the Nifty, and that led to a rally of nearly 1,500 points for the index, from the 22,000 plus to nearly over 24,000. Do you think that the 24,000 is now going to become a very steep climb once we see this correction today?
Yeah, so I strongly believe so, Sajid, because what could happen is what's actually happening is in that manner that after this 4,000 point plus correction for the Nifty, we are trying to balance it out by trying to come back towards a pivot point. So look at it this way: from 26,000 levels, we fell down towards 22,000 mark broadly, and now we are trying to come back into that equilibrium phase around 24,000 mark. So it's bound to be that the markets would swing around this 24,000 levels for some period of time because it's not as if that crude has come back towards 65. It's not as if that the geopolitical tensions have subsided completely. So I think in terms of those data points, I would sense the markets will take a lot of time. So for a short-term trader, you have to be sanguine enough to understand that the Nifty will consolidate over here at 24,000 levels. All you have to do is just wait for those opportunities in between where the markets drop off, come back towards maybe some sort of mild support levels where the risk reward originates to be a lot more better. So I would sense in that sense that maybe 24,000 mark over the next couple of days could be a little bit of a steep climb, but it's not something which I would believe that the markets would not retest again. I think we should be swinging around this 24,000 mark for potentially the next 2 or 3 weeks for the index at least.
Kunal, your picks for this market and for the day?
So, Harsh, I'll go with one buy and one sell. Apparently, one of the stocks which is looking a little bit more short term, on the resistance side is Power Finance. That stock is something which I believe is heading back towards a key resistance point. Would look out for a sell on Power Finance with a near term target could be kept closer to 424. Stop loss could be kept at 441. The second would be a buy on Wabag. Now, this is a very interesting chart. It's almost like a cup and handle formation for the stock on the daily time frame. The stock nearing a breakout of its 200 moving average. Would look at 1440 as a positional target. Stop loss at 1310.
Okay, on that note, let's take a very quick break, bracing ourselves for a little bit of a step back this Monday morning, 350 points lower. That's where the implied open is. We'll continue tracking markets on the other side.